What's next for the crypto market? Of course, we're dropping 20% more, so you will have your option to actually enter. Fear being greedy at the bottoms of the cycle. Today, I will actually prove to you that we are at the bottom currently. Today, I will push you and I will scream at you, buy into your assets. Buy and hold into your assets. You will get rewarded for buying currently and holding further into the cycle. A bunch of data to share. Without further ado, let's actually start. First of all, here's a picture of me on 5th of August on the grave of Beethoven. Some people say that Beethoven is quite similar sounding to Bitcoin, right? Beethoven, Bitcoin. And that's a very interesting. The reason I'm essentially showing this to you, let's quickly remove this indicator. The reason I'm showing this to you is because on 5th of August, we actually had the Pika bottom drop, the exact bottom drop. And I was at the grave of Beethoven exactly at this date. Do you think it's random? Nothing is random in this life, right? Coming back to our indicator, one more time, this indicator shows us the levels on any assets of long liquidations, 25x longs, 10x longs, and 5x longs respectively as well. We are at the edge of 10x long liquidation level at this stage, and if you've been following this channel and if you're following this indicator as well, what we see following this indicator over the whole course of the bull market, we are usually bouncing back from this level. If we significantly go lower below this level, it usually means that we are back in the bear market, and we should essentially, unfortunately, wait for many months and years of reaccumulation in order to jump back in. Currently, we are safely bouncing back of this level. You can see at this stage we had $55.5 thousand per BTC currently, and we received a nice reaction. Some people on the market saying that we should be filling this week up. I don't think so. I think that reversal is very soon, and we are due to reversal as well, because a range of assets, just understand this, understand how the market makers are manipulating you as Pavlov dogs. No one wants to hold. People want to flip everything for 2 to 3x. No one wants to hold anything in the market currently. A range of people actually expect for us to go lower. And as Pavlov's dogs, a range of assets out there, even at these prices for BTC, they are at the same levels as they were during this $49,000 drop, which means that people are selling prematurely, expecting the crash. This is not the situation where the crash is happening. This is the situation where reversal is happening, because it would mean that most people would actually be able to make money if we will have this additional crash, because everyone is waiting to buy back lower and things like that. Be careful, just be very careful with being greedy in the market setup where we are very close to the bottom, because you waiting to buy lower is actually being greedy. That's not the way how you make money in this market. Bitcoin Fear and Greed Index is 26 at this stage. Essentially, it's very close to the Fear and Greed Index back in the bear market. It's a very interesting type of situation, something I wanted to share. When 5 figures portfolio Memecoin traders start shorting the market, the bottom is indeed very close. This is the situation that we are seeing on the marketplace currently. Memecoin traders that only have 5 figures in their portfolio, they start to try to short the market. It just does not make sense in the first place. They are Memecoin traders. They probably came into the market, they probably came in for the first cycle, and they're trying to short the market as well. It's a very interesting signal out there, but it's just one of the many. Yesterday, I was sharing a range of them as well. Main one of them is actually trust issue at this stage. People are not ready to hold currently. That's the best type of situation out there, because even when the market will pop, you have to understand what the market makers are essentially planning from their end. Their goal is, in the first place, not to give you an option to buy the bottom, and secondly, if you bought the bottom, their goal is to shake you out of your position, to make sure that you won't be able to make money in the rocket that they will be launching. The goal of this rocket is actually to launch it quite fast. It should be quick, not to give you the option to re-enter as well. And the main idea, the whole goal is actually, if you were able to catch the bottom, to accumulate in multiple entries at the bottom, their goal is to actually make sure that you will be exiting at 2x, 3x, 4x, because you will start to afraid again. It won't feel nice in your stomach. You will think, man, we're probably going down. We'll probably have this final dip till $40,000 and I will just lose my money and I will again just see my money going to zero. I should probably sell and buy back lower. And this is exactly the time where you won't be able to do that. This is the time, it's a very, very important note. I think I was mentioning it yesterday. I want to mention it one more time. This is the time where you accumulate the assets. You buy into them and you might experience 20% dips, 30% dips, 40% dips. You just hold. You don't care. You hold the amount that you accumulated and you're actually buying more. You're buying more in smaller chunks. This is a very, very important thing because people still have this trading mindset when everything is going higher, everything is in green. I will buy into this asset and if it's going down, I'm protecting my funds and I'm selling. Nah. You need to see the big picture. You need to see the overview. You need to see what this market will essentially be turning into in some time from now. This is a very, very important piece of information. You need to be in accumulation mode currently. You need to be fine with sitting in dips, 20, 30, 40% dips, and just be buying more. Obviously, if you're buying into the assets that will be able to survive over time, range of assets out there currently are at the bottoms, so it's quite safe to be doing something like this with them currently, to accumulate them at this stage. Moving further, now that all of the crypto Twitter is on board with the 2019 comparison, after most of them mocked it back in March when it mattered, it should be time soon for BTC to deviate from the 2019 pattern. It works when no one believes it. When everyone believes it, the pattern should change. Let me quickly explain what actually ban means. He means that we are at the stage currently of the market similar to 2019 pre-bull market pump, right? We had this pre-bull market pump and essentially it ended with a huge bull market right after. And you cannot imagine how many people actually sold their assets and exited during these dips, during these boring times. So the assumption, something that Ben was sharing since March, that a lot of people actually mocked him for, and I personally did not believe him as well, that we are essentially in this type of formation where we are pumping before the whole bull run, but then eventually we are going down and back to certain level of pricing that we've seen before. And don't get me wrong, BTC wise, yeah, we did like 13K here and we went up to like, it's COVID crash, right? So we should probably not focus a lot on it, but if we would kind of take the average price for BTC here, we can say it at 7K, right? So it's only like 50% down on BTC. Alts, they got destroyed here. Destroyed, pretty much went to zero, exactly as we see the situation currently with a lot of alts coming back into the bear market accumulation ranges, as well as the meme coins as well. Ben was saying for months that this is the situation that we were in currently, and what he's saying right now is that as most of crypto Twitter finally accepted this situation and finally is thinking, people are thinking currently, well, they're probably getting this last 20% dip, that this won't be happening. And what should be happening, what at least has a higher success chance of happening, is actually us eventually surging higher from here. Look at the similarities of these things. So we are pumping up from here, right? And we are in this, some people are calling this a bull flag, right? It definitely seems like one, if we would essentially clear a part of this pattern right here, right? If we would do something like this. So essentially, the idea that Ben is sharing that in 2019, because of the COVID crash, we pretty much went quickly somewhere to these levels. And this is what a lot of people are expecting us to do. Go to 40K, go to 30K, and then they will have this option to buy exactly before the bull market. They will be able to scoop all the assets for cheap because no one except them was actually allocating cash to do that. No one except them lost this initial time to enter right here, and no one except them has funds to actually be entering at these levels. Fuck no. This is not happening, 100%. 100% this is not happening. We are at a very, very interesting situation because the market is kind of 50-50 currently, but it's still scared shitless. It's a very, very interesting situation in the marketplace. What Ben is saying is that as soon as 2019 thesis got approved right here, we should not be repeating it. We should not be creating this new low at this stage, and we should probably just continue, move higher or maybe sideways. My overview, my position on this is that we should be going higher. Like we have a range of fundamental macro things happening in quite a short time frame, which is very, very interesting. I do believe we're at the last couple of weeks of giant manipulation out there. With the stock prices, with everything that's happening on the stock market and crypto just lagging back, it's just so crazy to see. I hope I was able to explain that, and I hope it actually makes sense. Moving further, as measured from the low, BTC is back in line with prior cycles. This is something that Ben is sharing as well, which is very, very interesting. You can see this purple line right here, right? And when we were growing back to the previous all-time high right here, you can see the amount of this correlation we can actually see here. Previous cycle, green line, we were like at the bottoms right here. Yellow cycle, like we were essentially just trading sideways at this stage. And here, during the halving, we peaked at all-time high. We even breached through the all-time high. Obviously, if you would adjust inflation numbers, we did not, right? But still, we just look at the current numbers and price per dollar at this stage. And what happened since then is that we essentially came back into the area and we are correlating 100% with the previous cycles at this stage. The price of BTC is correlating 100% with the previous cycles at this stage, which means that there is a higher chance that we will continue to move further and move up, as both of these cycles essentially moved up from this point. Exactly right here, like you literally have 1 to 2 weeks, but the thing that you have is that prices, if the momentum will continue, if this bullish momentum will continue, prices that won't stay the same. No one will give you the option to accumulate at the current prices for 1 or 2 weeks. They will constantly just build up steadily, slowly, and then boom. They will just surge up like crazy, and a bunch of people will be left out of the market one more time because they got scared, because they sold, because they got bored, and a bunch of things essentially was happening to them, right? We had a bunch of theories sharing on the fact that it might be a left translated cycle because we had this all-time high per BTC at this stage. Currently, people can say 100%, market participants can say 100% it's not happening because we are in a pure correlation BTC price-wise with the previous cycles as well. And 2019 situation definitely shows us that alts, they are around the same level currently. We are back to the bear market accumulation ranges for a range of alts. Unfortunately, for some of them, the market cap is way higher. The price is the same, but the market cap is way higher because they had a bunch of free tokens get invested to the VC, something like SUI, for example. SUI is $0.9 at this stage, but at the same time the market cap is 2.5 times larger than the market cap of SUI 1 year ago, even when it was at $0.9. So it's very, very important to understand. If you don't want to kind of get into this trap, check out not the price of the token, but check out the chart of the market cap of the token. It will give you a better overview. This is the most agreed upon calling for lows I've ever seen. Lol. Usually I'm kidding, but I feel very comfortable being bull charted here. The absolute worst case is 50% more drawdown before the biggest bull in history. 50% more drawdown on BTC, I doubt that. On BTC, maybe 20 to 50% to 15%, I'm sorry. 20% drawdown on BTC. Will actually it cause 50% drawdown on alts and meme coins? I would say it's quite hard to say because we've been in this peak fear. I think the issue is if this type of drawdown will actually be happening, it should get bought up quite quickly. And this will change the sentiment. Back when this sideways fuckery actually started, I was telling you that the market manipulators and market makers, they need to make this process painful. They need to make this process over time as well in order to have time capitulation. And if they will just have a quick drop, like imagine we did not have the 6 months of sideways action. We just drop on alts 80% down in 1 week, right? It will just get bought up quickly and the whole thing will just resume, and people won't capitulate due to time as well, and people won't get bored. And this is not something market makers actually need. They need to draw the charts and they need to present the market in the worst case possible to make sure that as many random tourists will be out of the market as only possible. Guys, global money supply just broke all-time high. Yeah, but whole of crypto Twitter is bearish September and bullish Q4. This is something I was sharing. I was wrong about my August prediction because I was saying that I have a feeling we should be pumping closer to the end of August. And if you remember this pump, this pump. Let me quickly remove this part. If you actually remember this part, I was screaming on my Twitter then, yeah, this is the pump, we're probably going higher. This did not happen, right? And like market makers, they have all the tools to actually dump right after this level. They probably saw that too many people are still bullish, too many loans are opened, funding in positive. They decided, nah, we did not inflict enough fear. We have to inflict more. That's why they essentially decided to dump further. At this stage, I would say we are quite close to the situation because they have to be in balance. And I would say right now the sentiment is very, very nicely balanced, right? Because you have to understand, if it would be too overly bearish on the market, it would be a very, very clear buy signal for certain people. And these certain people, they are most likely whales. They have a bunch of money, because if this would be a buy signal for them, it would mean that they've been in this situation before. Therefore, statistically, they have a higher chance to have more money, and they have a higher chance to acquire larger percentages of supply in different projects. And this is something that market makers don't need. Because if randoms are acquiring a larger percentage of supply in different projects, then this is actually bad for the project, because they will stop this thing from pumping. And range of them, they will be selling maybe after 2x, 3x, 4x. This is not what they want. They have to keep this thin balance. It's very, very important for them to inflict certain fear, but also to make sure there will still be buyers. Make sure that they will not drop the whole thing to zero, because then too much random people will essentially enter. And in general, like, people are calling for 30k. Do you understand that 30k call is actually the start of the bear market? It means that big player is not interested in pushing this asset higher. It means that he giving prices that are too lucrative. They're too nice. There are zero reasons for the big players to actually provide you these entry points, because it means that they just don't care. And if they don't care, they don't plan to push this price going higher. And this is actually the way how you can check certain situations happening in certain meme coins as well, right? If the meme coin drops too heavily, it means that probably larger players, whales, they might have decided to abandon the asset, right? They might want to not do anything. And in general, it's essentially bearish for the project, because it means that main force that actually wanted to push the project decided to move somewhere else. It's very, very important to check out, very, very important to follow. I've been in crypto since 2016, and this is the worst sentiment and the highest disillusionment I've witnessed ever, especially from the core OGs and long-term believer. Make of that information what you will. The sentiment is very, very interesting. It definitely was worse during like the 7th of September. Right now, it seems like the market is a bit changing, right? It's a very, very important tweet I wanted to share and to comment on as well. Market makers just have one job: make the chart look shitty as fuck as possible before Giga Cent. Same applies with Elliott wave structure. We are in, at the moment, different chart I might post next week, we are in the wave 4, and wave 4 typically is the worst. Its only job is to spread uncertainty. This is so important. Wave structure right here. Well, if we are in the wave 4 at this stage, that means that wave 2 was not the large one, right? So probably something like this, wave 3 and wave 4, right? So 1, 2, 3, I'm sorry, it's not right. 1, 2, 3, 4, right? And wave 3 is usually the most explosive one in terms of the percentage of gains and things like that. I would say that this might be the case, right? But I just don't like the fact that wave 2 is that small right here. And maybe this is wave 2 as well, but it's like too small as well. My theory would actually say that this is wave 1, this is wave 2, and we are at the edge of the fucking enormous tsunami of liquidity, which would be wave 3. We're at the edge of that, the most explosive one, right here. Because if we are in wave 4, what this assumes is that essentially our target would probably be like 120, 150k BTC. I do think that we should be going higher. I do think that currently at this stage, and I just don't see a clear structure for wave 2 at this stage. Maybe like somewhere right here, it's too short. Like the decline is not that great, right? Speaking of alts, BTC, yeah, it's like 35% correction. Speaking of alts, it's definitely like, it's almost 80% correction. This is like a job for the wave 2. This is not a job for the wave 3. It's not the job of the wave 4. Wave 4 is usually like this small corrective thing. It's not like that harsh. Wave 2 is usually larger than wave 4, right? Right here. But like, this is just my assumption at this stage. I know you're probably overly bearish, so you're thinking like, what the fuck this guy is actually saying? But yeah, this is market makers just have one job: make the chart look shitty as fuck as possible before Gigasan. This is something I wanted to share. Bob Loukas. This is the guy that each and every one of you influencers essentially watching and then just translating his information right after. Very, very famous guy in certain circles, right? But he got 350k views, so probably he's quite famous as well. In past cycles, Bitcoin did 30% drawdowns often and with ease. We all took it on the chin. Feels different this cycle. I sense a lot more uneasiness. And I believe it's because this is second or third cycle for most, and they're looking for a set for life cycle. It's very, very interesting. People are looking for retirement type of cycle. That's why it's essentially a bunch of uneasiness, because if it's second or third cycle, it means that they spend in crypto market from 4 to 8 years already. And if they're still in the market, it means that they were not able to make it in the previous cycles. And that's why it's actually quite painful. That just perfectly sums up with my theory as well. Why we won't have this 120 to 150k is because people are too hurt. It's because at 120, 150k, they will finally decide that, well, it's probably time, I will probably just need to sell, we will correct heavily, and we will continue from there. And they will form back in at the highs, because through all this move, they will be thinking that it's just a giant manipulation when going nowhere. You have to understand that these people with the second and third cycle experience, they are the ones that are creating the overview, media overview of the cycle at this stage. It's a very, very interesting situation right now. Overexposure, overconfidence, unrealistic expectations all can lead to being in a position that quickly becomes stressful and difficult to manage. I, for one, firmly believe this cycle will deliver, but I sure as hell wouldn't bet my ranch of health on it, as many do, regardless of how much I had. Just not a way to invest. A very, very interesting outlook on this situation. If Bitcoin can hold the weak support and not close under 51.5k, we'll enter the parabolic phase of this cycle with prices well above 85-90k. If we can close lower, it will just extend accumulation. Extended accumulation, will it actually be a drop into the bear market? That's the question. Screenshot those bear posting every day. They'll be ones for me. Everyone is too fixated on next week's rate cut being priced in and not focused enough on what the next 12 to 18 months of monetary policy could look like. We've just been through 2 years of rate hikes. How about 2 years of rate cuts, mate? Well, I will take 2 years of rate cuts easily. It will mean that the money will become cheaper. It will mean that the money will be directed into risk assets, and it will mean that your aunt will be buying my boba bags in 1.5 years from now. Thank you very much for watching this video. I'll be seeing you tomorrow. Bye-bye.